Over 60% of Canadian homeowners are renewing their mortgage this year, and they're about to get hit with a massive payment shock. Some facing increases they've never seen coming because they locked into the rates back in 2021. And yet, variable rates are still holding steady while fixed rate spikes because of bond market chaos. If you think rising rates are only meaning higher costs, wait until you see how the new federal Ontario HST rebates could flip the game completely. We're talking about tens of thousands back in your pocket. Don't miss this because you have the risk of paying way more than you should. So let's break down what's happening with mortgages right now across Canada. Over 60% of borrowers are renewing in 2026 and facing monthly payments increases compared to the super low rates that they had in the 2020 and 2021. Those 5-year fixed rates are feeling the biggest pinch. Rates have jumped quite a bit. Sorry, let me back up here. Before we dive in, I'm Dion Williams from Williams Mortgage. I work with Canadians all across the country, helping homeowners get mortgage free faster. That's what I do. If you want to chat, click the link below and book straight into my calendar. And while you're at it, hit that subscribe button so you don't miss any updates. Oh, and by the way, this video is part of an exclusive collaboration with top real estate professional YouTubers from across North America. We're breaking down what's really happening in local markets. The stuff you won't hear on the evening news or read in some generic market report. If you want the real inside look at what's going on beyond the city, make sure you check out all the video links below. These aren't random YouTubers. These are people who know their market inside out. All right, let's talk about as of April 2026. The lowest 5-year fixed rates are hovering around 4.4%. The best 5-year variable rates sit about 3.35%. The Bank of Canada has kept policy rates steady at 2.25 through early 2026, but many expect it could start climbing again later this year. See, fixed rates are high right now because of the volatility in bond markets. Variable rates are holding steady for the moment. So, what are borrowers doing? Many are tightening their belts. About 64% are choosing to lock into a new fixed rate deal for the peace of mind and stability, despite the higher costs. Here's what renewals could look like if you lock in a low rate back in the early 2020s. Say you could get a 1.68% interest rate. On a mortgage of roughly 645,000, you could be looking at an increase of over $600 a month right now. That's a shock no one wants. And the stress test still applies. You need to qualify at the higher of 5.2% or the contract rate plus 2%. With current rates at about 4%, this limits how much you can borrow. It can be a real barrier if you're trying to upsize or buy a new home. If you found this helpful, hit that like button and the subscribe button for more updates. And drop your questions in the comments. I'd love to hear your thoughts. Now, here's the good news, especially for first time home buyers and those buying in Ontario. The new federal and provincial rebates just rolled out, and they could save you a ton. The federal first time home buyers GST rebate passed on early March 2026. It's retroactive to purchases from March 2025 and offers about 100% back on the federal portion of GST or HST on new or substantially renovated homes valued at $1 million. That's about $50,000 back in your pocket. Partial reliefs are for those homes or those purchases above $1.5 million. On top of that, Ontario's new enhanced HST rebate started April 1st, 2026. It removes the full 8% provincial portion of HST on new homes up to $1 million. That could mean as much as $80,000 saved in provincial tax. And unlike the federal program, Ontario applies to all buyers, not just first timers, as long as you live in the home or rent it out. Combine these, and your eligible buyers in Ontario could see as much as 130,000 in total HST rebates. on new homes under $1 million. That's a game changer when you factor in, especially the rising interest rate costs. See, the market has cooled somewhat. Existing home sales were down about 6% in January. More homes are sitting on the market. Like in Vancouver, where listings rose about 30% year over year in 2025, this could be the perfect window to take advantage of these rebates and secure a better deal. If you're renewing your mortgage or thinking about buying new, especially in Ontario, don't overlook these incentives. They could make a huge difference in affordability and monthly payments. If this helped you, hit that like button and hit the subscribe button. And while you're at it, hit that little bell. If you want to book a call with me, take a look at your restructuring payments or pay off some debt or just review your scenario, click the link below in the description. You can book directly into my calendar and we'll meet on a Google Meets. Thanks for watching.